Welcome to Markets Now. I'm Michelle Brook with Randy Martinson, Martinson Ag. Mixed closes in both grain and livestock futures trade today. And let's talk about the grains first. Randy, we did see corn and soybeans higher, but wheat was sharply lower. I was impressed that corn was able to hold together here today with the down move in the wheat market. So was that market trading weather?
I think some of it is weather. I mean, look at the forecast is calling for a high pressure ridge, or at least a hotter conditions for a majority of the Corn Belt region. And I think that came in to help support the corn, especially because of, the wet conditions that we've had, not much of a root structure. If we get in some really hot temperatures, we could start to see the crop deteriorate fairly quick. So I think that came into play, but I also think exports were good. I mean, this morning's export inspection numbers continue to show strong demand, strong shipments for corn. And I think that added in a little bit of support.
Yeah, strong export inspections, 52.7 million bushels. Do you think USDA will make any demand adjustments upward in the report on Wednesday?
I think it's possible. I mean, that we certainly have been seeing the exports, sales over 1 million metric tons, shipments have been going good. I would not be surprised to see USDA come in and adjust the export numbers for corn up a little bit.
Yeah. Technically, we held support we needed to on Friday, but then today we kind of ran up into resistance, kind of ran out into that 100-day moving average, didn't we?
We did, and it's going to take something more. We're going to need some news to push us through that, but it was nice to see the support lines hold, which is about that 50% retracement from the recent high and low. So it was nice to see that level hold, but it's going to take some friendly news to help push this thing up over it and get another rally started.
Soybeans were higher and kind of pushed by the meal market. Where's the strength in the meal market coming from at this point?
I think it came from a couple different places. One, we continue to hear talk about Argentina, still planning on going on strike. But I also think some of it could have come from the NOPA crush numbers being adjusted a little bit higher off of that discrepancy. So I think that those two things came in to help push the soybean market a little bit. And the fact that now it looks like we're going to get all the crop planted, and maybe we're not going to see an increase in soybean acres.
Yeah, because export inspections actually on Monday morning were behind the average pace. I mean, we're down quite a bit for the year, aren't we?
We are. We continue to struggle as far as the exports are concerned for soybeans. And, we were hoping that, now that Brazil is starting to make some adjustments to their taxes and stuff, we'd see a little bit more demand come to the U.S., but it just hasn't followed through yet.
And again, do you think that we're going to see exports adjusted down in the report on Wednesday?
I wouldn't be surprised to see that. I mean, we've been trailing pretty bad, and we haven't seen any sales for 2024 in there, so any new crop from China. So I do think we'll likely see a little bit of a correction to the downside in exports.
Yeah. We'd had a horrible day, new lows for the move. I think this is the 9th day down that we've had here. Is this more than harvest pressure?
Well, I think there was three things that came in and hit us today. I mean, one of them was harvest pressure coming out of the Southern Plains, better than expected yield reports coming in. But I also think that, there was some rain reported that fell in the Black Sea region. I think that added some pressure to the U.S. market. They're not out of the woods yet, but they're starting to get rain, which is helping. And I think the third thing that came into play was, of course, our stronger dollar.
And how much technical damage have we done to the charts now for the wheat markets?
Well, pretty much a lot. We were at that 50% retracement on Friday, so breaking that through that now takes us down. And it's likely, I hate to say we could test the summer lows or our previous lows, but right now this market doesn't have a lot that's catching it.
So let's talk a little bit about the WASD Wednesday expectations that you have in terms of first old crop. What will we see for adjustments, do you think?
For old crop, I mean, I wouldn't be surprised to see for wheat that we're going to maybe see exports trimmed a little bit. Would likely see that for soybeans and for corn a little bit better. But we're also for new crop. I wouldn't be surprised to see wheat production increased a little bit.
Is that another factor that may be weighing on this wheat market here? Is just that expectation that we're going to see that, and maybe ending stocks will be higher as well?
Oh, most definitely. I think that is also weighing on it. I mean, the average trade estimates have it increasing a little bit. So I wouldn't be surprised to see the trade looking at that. And we're not looking for, the crop ratings to come in much different. But for right now, I do think that because of the better than expected yields, we will see an increase in production.
As far as new crop, we are not expecting yield changes or acreage changes for corn and soybeans, though, are we?
No, at this point, I wouldn't expect that. I mean, we're not seeing anything that would kind of give us that kind of hint that we would expect to see any change as far as the supply side for corn and soybeans.
Right. What will USDA do with South American numbers? Will we see much of an adjustment there?
I don't think we will because, we got CONAB the next day. They're going to follow it on Thursday. And I think USDA will maybe lower 1, maybe 2 million metric ton, but nothing major. I think they're going to wait to see, where CONAB's numbers come in on Thursday.
And the cattle market had a nice up day. Is the market anticipating better cash this week, or was this technical?
I think it was a combination. I think a little bit of the technicals came into play, but I think we are looking at a little better cash. We're going to start featuring for the 4th of July holiday here pretty soon, and we're kind of still riding on good demand from Memorial Day, so I think that's part of it that helped push this market.
Now, the one thing that was interesting, Commitment of Traders report, Randy, showed that funds actually were exiting some of their long position even as of last Tuesday when they take the report. Is that a concern, I guess, at this point, that we don't have the funds in there helping us?
Well, it's a concern. We're not going to see, we likely won't be able to see the market push that much. If they turn to be sellers, that's really going to, I think, then be we'd be looking at a pretty good profit taking spur. I think that would happen if that took place. But not having them coming in and buying, it's going to prevent the market from being able to go to its previous highs.
Hmm. Hogs went the opposite direction. Hogs have struggled here lately. We're right off of the recent lows that we set. What is the problem with that market? Is that demand, or is there something else going on?
Right now I'd have to put the finger on demand. I mean, right now we're seeing slower demand as far as the U.S. is concerned. Maybe this market's waiting to see what the quarterly hogs and pigs report will say at the end of June. That's another report that we're looking at to see if we've seen any expansion. But at this point, I think it's just sluggish demand.
Okay. Thanks so much for joining us, Randy Martinson with Martinson Ag. That is Markets Now.